This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Jake Moilanen of Seraph Group. Jake, thank you for joining us again.
Thanks for having me back in the hot seat.
Great. Can you give us a short update about what you've been doing since you came on our program last?
Yeah, sure. So is the saying, a smooth sea never made a skilled sailor?
Oh, so it's been an interesting time, it sounds like.
And navigate some of these rough waters. Yeah, we've been mostly making sure our portfolio is stable, making sure all our companies are well capitalized. Thankfully, we're all in a good shape at this point. So we're starting to look to be a little bit more opportunistic now. But additionally, we've been spending a lot of time on quant. So we are a quant-focused firm, and we've made a bit of a discovery, which I've been pretty excited about. And I won't bore everyone with my math and algorithms today, but I think we found what we call the golden curve. And so it's conceptually kind of think of it like the golden ratio that you see in nature. Same, the seashells have a formation, so do waves and pine cones. This is a curve that we are also seeing quite a bit through venture capital. Unlike most financial assets, they follow a normal bell distribution of a curve, where there's an average and then it kind of tapers off on either side. Venture follows a power curve, and so a few big outcomes really is what moves the needle for everyone. And we think we've found the curve, a model of the curve that is representative of a number of different types of elements within venture. And so this has really unlocked the ability for us to do a lot more on the quantitative side and modeling our portfolios and determining mathematical bottlenecks and ultimately get better returns. So we've been pretty excited, and this a whole new chest of things to go work on now.
So I understand the golden ratio. So the golden curve, what are the elements of the curve? Is it the investment at a certain time? Or what are the elements of the curve that you're looking at?
Yeah, so the major thing you can look at is how much money is returned for every dollar invested, or DPI. So if you invest $1, what is the average return, or I guess the return you could expect to get back? Most investments don't return the money back. Actually, 64.8% of all investments will not return the same amount of dollars that you invest back. And it's really the 35% that makes up the majority of all the returns, frankly. And so what this curve really lets us model out is exactly what that looks like. Helps us get an idea of how to avoid that 65% that don't work.
Okay. That sounds good. When do we expect to learn more about the curve? It sounds like you're still formulating and putting it together.
We are. I'm hoping we can actually release a few models here shortly. We'll push them out on Twitter.
Oh, all right. Looking forward
maybe
to
a blog post too. We'll see.
Yeah. Sounds like it could be pretty interesting. I've always had the presumption that 75% of all startups don't pay back. 10% pay back very well, and 15% pay back something. Not a lot, but something. And to your point, the power law is really in that top 10%. So 1 out of 10 is what they usually talk about that VCs look for, that return the entire fund. And so in the bottom 75% don't return anything. So you can forget those. And was always looking for models for how do you avoid the 75%. That seems to be the challenge out there because there's just so many of them.
Exactly. That's the secret of venture.
Well, great. Well, let's talk about your investing experience. Can you tell us about a company that you regret not investing in, and then why didn't you invest at the time?
Yeah, sure. So there's been a few, but actually probably the one that really was formative for me was a company called Ride Scout. When I first saw it, I believe it was actually at one of your events, Hall, but it was called Going My Way. And Joseph Kopser was a very, very charismatic founder, very, very passionate. I remember when he presented, he just took over the room. And I was looking at doing an investment in them. This is pre-Uber, so pre having a ride-sharing type apps. And it was looking to be a pre-seed investment. And normally when you do a pre-seed investment, you're betting on the jockey. And my gut was saying that Joseph was a great jockey. But logically, I couldn't get over the fact that it was being pitched as a hitchhiking app, more or less. And so I could see all kinds of ways where that could have fallen apart and been a complete disaster. So I ultimately passed on it. And while it didn't have an Uber-like outcome, it did have a very good ROI for investors and would have done pretty well. But this was one of those where I look back at and I looked at this really helped me understand how combining your gut plus logic leads to better decision making. And it's one of those is one of those good lessons that I learned early in my career.
That's a good point. That's a good point. So today, in this time frame, what sector are you passionate about and why?
It still has to be AI. So artificial intelligence is still in its infancy. If you look at most product building technologies, the life cycle starts in a very, very raw form. So think computer programming languages, it was assembly. Then it moves to higher and higher levels until you're kind of building with Lego pieces. And these Lego pieces is why my 7-year-old can program a basic coding or basic game today. And that's really allows them to do a lot more than obviously what you could do 10, 20 years ago. But when you think about AI, what it really does is it turns decision making into a Lego piece. And what it does, it unlocks the ability for you to have products that plugs in a bunch of different these Lego pieces, a bunch of this different decision making engines into a product that ultimately just you couldn't have had even 5 years ago. And these are giant leaps of what is being built that from what exists today. And so I'm very excited about that. I think we have a long ways to go, and it's an area that I'm still looking to heavily invest in.
Where do you think AI will make its biggest bang early on? In what sector, what application do you think it's really going to show up first and best?
Well, it's been showing up all over advertising. That was the easy low hanging fruit.
Yeah.
Now we're starting to see it go much broader. And I think where it's really interesting though is on the medical side. So at Seraph Group, we do a lot of investing in medical devices, and one of the themes that we invest in is medical devices that are combining artificial intelligence. So like echo devices, which is that they are putting a artificial intelligence algorithm into a stethoscope. And this allows them to detect all kinds of different heart patterns way quicker than any cardiologist could ever do it. And so these type of technologies, I think, are really unlocking a lot of advancements that, again, just didn't about that field today. In the future, I would love to see what happens with artificial general intelligence. I think that is still that's very, very early still, but I think that's going to unlock all kinds of new abilities that just we can't even fathom today.
Very good. And so, are there any particular sectors that you're avoiding today and why?
Yeah, so I think the major sector I'm avoiding today is crypto and blockchain. Again, we talked about earlier, but 64.8% of all venture investments don't return their capital. And the challenge with crypto and blockchain is just so much noise out there that's really, really hard to find that 35%. That being said, I do invest personally in other funds that are focused on this that do this day in, day out. But I'm personally steering clear of it as just too much noise today.
And then, what's your best experience with a startup? If you had to pick one that was really great, what would you describe about it?
I've been fortunate to work with a lot of great startups. If I had to choose, it would probably be Molecular. They are a data virtualization company here in Austin, and their CEO, H.O. Maycott, is amazing. He can walk the tightrope like no other CEOs can walk that I've seen in a while. He balances vision, being pragmatic. He can balance technology with business requirements. And ultimately, he really knows how to not only work with his board, but also working with everyone on his team. So he really knows how to both manage down and manage up. And it's been a pleasure to work with him and Molecular. So it's definitely one of my favorites.
And then, what's your worst experience with a startup? We don't have to mention names, of course.
Yeah, I might have to punt on this one. My lawyers won't let me talk about it, but it's unfortunate when it goes down that road, but it does happen from time to time.
Understood. So, in today's market, we're seeming like we're coming into a new set of careabouts and so forth. What do you think the challenges are that startups face today? Is it regulatory? Is it technical? Is it market? Or is it something else? What do you see your startups struggling with the most?
Yeah, I think for startups, at least in Austin, it's a lack of capital, especially during COVID. Also, we've seen hiring being very difficult for them. We have all these large cap tech companies like the Apples, Googles, and Facebooks, and now Teslas of the world coming in and taking the best engineers and all the seasoned executives. So that's been a very difficult thing for a lot of the Austin companies. And I'm hopeful that we are developing the ecosystem, though, that we're going to have a lot of talent that rather work in startups versus going to corporate America. So I'm at least optimistic from that point of view.
Well, great. And then if you had to pick a couple of sectors or applications out there that you think are good immediate opportunities to pursue, what do you put at the top of the list, say 1 and 2?
So Corona has really unlocked a lot of new change and normalized a lot of behavior that just wasn't normalized before. So for example, it's becoming more acceptable to do sales calls on Zoom, where before these calls had to be done in person. It'd take you 1 or 2 days to travel to visit on site and have the meeting and then come home. Now you can actually have that Zoom meeting and then do multiple of those in a day. So from a sales perspective, it's been interesting to see how that's going to unlock a lot of new efficiencies within the sales organization, what's possible there. I think the other area that's super interesting is you look at Spotify. They're going to an all digital office. Facebook, they're going to 50% digital office. So that means there's going to be a lot more home offices. So I'm looking for technologies that can really take advantage of this trend. I don't know what those are yet, but it's definitely an area that I'm looking very, very heavily in today.
Very good. Well, the last few minutes that we have here today, what else should we cover that we haven't?
I think we covered a fair amount of ground. I think the only thing I might also just throw out is that we are currently still fundraising for a Seraph group focused on the Austin environment. If anyone's interested, we would love to chat.
Great. We'll add that to the show notes. Want to thank you for joining us today and hope to have you back for a follow-up soon.
Absolutely. Appreciate it, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.